Today I'm going to be talking to you about 10 policy coverages that you should know about. So I'm Sara Sordi with Sara Sordi Insurance Services, and I am in Fresno, California, but I am licensed to help people in most of the western states. So again, I want to talk to you about the 10 different policy coverages that you may not know about, but you should. So one of those things is jewelry coverage. A lot of people think that jewelry is automatically included on your policy, and there is a limitation on the policy. All these different limitations that I'm going to talk to you about today, they vary policy to policy, but I'm kind of going to give you the most general coverage, and it's good idea for you to review with your agent and make sure that you have the proper coverage. I just want to bring it up to you because sometimes people assume that these things are covered for and they're not. So again, the first one is jewelry. That's kind of the most common thing that people have in their house, and they don't realize that they have a limitation on that. So a basic limitation would be $1,500, and with that $1,500, that's just going to cover if the jewelry is stolen or damaged in a fire. So, oh, my connection's weak. Okay, I think it says this week still. Oh goodness. Okay, well, it says this week. I don't know if you could hear me or not, but so sorry if you're watching this on the replay and I keep breaking in and out. I don't know how it's going to cut me out, but basically, okay, so I wanted to talk to you about your jewelry coverage. And a lot of homeowners policies have a limitation for only $1,500 for jewelry. So if your ring gets stolen or damaged in a fire, you're going to have only $1,500, and you're going to have it subject to the deductible in the policy. And most homeowners policies have a deductible of $1,000. So that's just something you want to take into consideration, because if you schedule that jewelry on your policy, then you have coverage for anything that happens to the ring. So let's say you're washing the dishes and you set your jewelry down by the sink and it goes down the sink, you would have coverage for that. If your ring gets stolen, there's coverage for that, and no deductible. If you have it scheduled, there's no deductible. Kind of the way it works is that if it's under $10,000, you don't need an appraisal. Just kind of a receipt or in a detailed description is enough information, but you can get that jewelry added onto the policy, and it's generally less expensive than the insurance that the jewelry offers. I know a lot of times when you buy a ring, they have just kind of like a little coverage that they offer. I've had some clients that have had me quote them so that they can compare, and generally it's less expensive to add it onto your policy. And so let's say you're going on vacation and you lose the ring in your hotel room, covered. Stone falls out, covered. Can't find it at all, gets lost, covered. So, you know, and I've had that happen. I have a good girlfriend who just lost her ring. She could not find her ring anywhere in the house. She was looking for it for months and months and months and could not find it. I have another girlfriend who was going to the tanning salon and, you know, took off her rings there and left it and forgot about it and came back, and of course it was gone. So if something like that were to happen to you and you have the jewelry scheduled on your policy, you would have coverage and you would have no deductible. So it's really, really awesome to have that. Another thing is firearms. So most policies offer a $2,500 deductible, or $2,500 in coverage. So if you have more than $2,500 in guns, you want to make sure to let your insurance agent know so that they can increase that limit, or it's just to see what exactly your policy offers. Another one is business property. So business property, most policies offer $2,500, and again, these are just standard policy limits. Your policy may vary. $2,500 for business property that's on premises, and $500 away from premises. So if you have something that you use for your business, it does not have those full personal property limits. It's going to be restricted to approximately $2,500 for if something happens to that property, if it gets stolen from your house, or $500 if it's away from the property. So if it's something like a laptop or equipment that you use for your business and something happens to away from the property, you're gonna have $500 in coverage. So you wanna talk to your agent about that. I'm also gonna be posting a link below this, and it's gonna have a PDF that you can print off or look at and just review it all if it's easier for you to read things. But yeah, so number 4 is going to be identity theft coverage. So a lot of homeowners policies offer for a really minimal premium. So I've seen as far as like $12 to $25 a year, they will give you ID theft coverage. So if something happens, they will help you to restore all the damage that was done by your identity being stolen. Just get all those records and that kind of stuff for up to $20,000 is generally what I find. Backup and sewer coverage. So if you have water that backs up or your sewer backs up and causes damage to your house, you want to make sure that you have coverage for that. That is actually a coverage that is not on most policies. So you want to make sure that you add coverage for that. Either like $5,000 or $10,000 is generally enough coverage. Again, just another good talking point to have with your insurance agent. Ordinance or law coverage. So what ordinance or law coverage is let's say that your house was built even in 1990, and now after, I believe it's 2010, all those houses have to have fire sprinklers. So if you have a loss in your house, let's say you have a fire in your kitchen now. So when your kitchen gets fixed in this fire, you're gonna need to bring your house up to code. So code now is sprinklers. So you wanna have that ordinance or law coverage on there. So it would pay for the additional cost to bring your house up to code. You know, I know some of the older houses too, the electrical plugs used to be kind of further apart, and now kitchens, I don't know what the footage is because that's not my department, but I know that you have to have your plugs closer together. So that type of thing, it would bring up your house to code for that as well, because that is not something that is automatically covered by your policy. Another coverage that is nice to have on your policy is mortgage extra expense. So let's say your house burns down today. How the claim is going to be handled, let's just say it's a total complete loss, your house burns completely down. The insurance company is first going to pay the mortgage company, okay? So if you owe $300,000 on your house and that's the amount of damage, $300,000, that $300,000 is just going to go to your mortgage. So now you need to get a new loan to rebuild your house, and you're going to have closing costs, loan fees, and let's say you got your loan now, and so you have a really low interest, but when the fire happens, let's say it's 7% interest. So you're out the increased interest costs that you have on your monthly payment, and you're also out these loan fees and closing costs, all that kind of stuff. So I have a few companies. This is a very nice kind of little bells and whistle to have on your policy, but I do have 2 different insurance companies that offer $25,000 in coverage for this to get you back, to kind of make you whole there. That is very unique coverage. Most insurance companies do not cover that. So just that's something to talk to your insurance agent about as well. Another thing is an umbrella policy. So what an umbrella policy is it is a policy that goes over pretty much all your different policies. So if you have a house, if you have cars, if you have boats, a rental property, this is a liability policy that goes over those policies if the liability limits get used up. So let's say that you have a rental house and the tenant has a dog that bites somebody and causes injury to that to someone. Your insurance policy that you have, your liability limits for that rental are going to cover them, but let's say you only have $500,000 and this person's severely hurt. This is $1 million on top of that, so it would be 1.5 that you have. Again, it also works for if you have, let's say, a really bad auto accident, and the limits on your auto, the liability limits So an umbrella policy is liability in addition to what you have already. So let's say the liability limits on your auto policy are already all used up in this accident because somebody was severely injured. Then this umbrella policy is going to come into play, and with increments of, you can buy the policy in increments of $1 million. And it's super, super cheap. Okay, so if you have a home and 2 autos, I would say the average umbrella policy is $200. I've seen them like $150 even or less. The price varies based off of let's say if you have a young driver in the house, because obviously they're more likely to get in an accident, or if you have more things. So if you've got the boat and you've got multiple rentals, the more things that they're covering with the umbrella, the more it's going to cost. But it's still, I don't know, maybe $300 if you've got a lot of stuff. But it's really a good thing to have because it gives you that extra peace of mind. So if somebody does sue you, okay, I don't know if you just lost me because it's blinking at me again that my connection's weak. So I don't know if I broke up or not. Anyways, an umbrella gives you that peace of mind because you do have that protection. And flood insurance. Not that we really need a whole lot of flood insurance here in the Central Valley, but most homeowner policies do not cover flood. So flood and earthquake. So earthquake is my number 10 thing. So earthquake is also not covered by your homeowner's policy, which again, I know we don't really need earthquake probably here in Fresno, but just to kind of give you an idea, if you did want flood insurance, that's about $450 a year. And if you want an earthquake, it's probably like $300 a year. And earthquake is offered, you probably see if you own a home, that you get a notice every other year that is an offer for insurance or offer for earthquake insurance. They're required by California to offer that to you every other year. So that's why you do get that. Whenever you get a new policy or just when your policy is renewing every other year, the insurance company is going to be sending you just a letter to offer you earthquake. Okay, so again, I'm gonna post a link so that if you want to pull this all up and take a look at it and just print it off or whatever you want, I'll post that link in the comments section. But again, to review, the 10 items that you may want to review in your insurance policy are number 1, jewelry, because most homeowners policies have a limitation of $1,500. Number 2, firearms, because most insurance policies have a limitation of $2,500. Business personal property, if you have business personal property, there's limitations of generally $2,500 on premises and $500 away from premises. Number 4 is identity theft. Number 5 is backup of sewer drains. So if you have water coming into your house, you want to make sure you have coverage for that. Number 6, ordinance or law coverage. So it brings your house up to code should you have a partial claim, such as a fire claim. And number 7 is mortgage extra expense. This helps pay for the cost, the loan costs and interest costs that you may have should you need to completely rebuild your house due to a claim. And number 8 is an umbrella policy. Number 9 is flood. And number 10 coverage that you want to review is earthquake. So I hope that you have found this information useful. And if you have any questions, please feel free to message me, and have a great evening. Bye-bye.